All right, good morning. Happy Friday. It's WASD Day, right? We just got over the first hurdle, which was PPI, and that's going to throw a wrench into things, I hate to say. But we'll see how these things all shape up by the end of the day. But we've got a WASD, so I'm going to give you the overnight prices. Tammy just did. We'll redo those again. But just remember, they're all going to change at 11 Central, 12 Eastern. So let's go through that corn board. Corn was lower overnight by 4 cents in SEP. That's 3.96 and a quarter. We were 3.5 cents lower than the new crop D's to 4.07 and a quarter. That's no bueno. Well, we'll check on beans. They were 3 cents lower in August. 11.14 was last there overnight, and we had a Novi new crop down just one tick to 10.67 and a half. If we go to the Chicago wheat market, we'll see that what was that doing? They were all lower too. After yesterday's spike higher, they kind of sold off here. 9 cents lower in SEP to 5.62 and a quarter. And we've got a March board down 7 3/4 cents to 6.07. How about the hard red at Kansas City? Let's take a look at that one, down 14 cents, double-digit losses there. That's September, 5.69 and 3/4 is the price. March is down 13 1/4 cents to 6.02 and 3/4, and that's finishing up on the low of the day there. That's hard red in Kansas City. Let's go to the spring wheat in Minneapolis. 11 1/4 cents lower in that SEP contract. That's 6.07 and a half. And we got a March board down 10 1/4 to 6.44. And then we're going to check in on cotton, and we'll get back to our next guest analyst. Cotton is, drum roll please, 11 points higher to 70.98. All right, let's get to them. We can't start Friday without it. It's Brian Hoops, Midwest Market Solutions. Thanks for coming on, and good morning to you, sir. I don't know. The floor is your, we just had PPI, but we're going to have this WASD, so we're kind of in a little bit of a no man's land when it comes to data. What are your thoughts here for today, your 30,000-foot view, or maybe you've got something you want to chew through here?
Yeah, we're kind of in no man's land right now, Scott. We came out with that the numbers that were out this morning. Dollars is down again this morning, but strangely, gold and silver just getting smashed off of this news. They're sharply lower. The wheat yesterday, I thought had its rally. The only real fundamental was because of the lower dollar, and that dollar kind of came off its lows. Wheat came off of its highs, and now we're trading lower overnight. So, we just had some short covering because of the lower dollar. We're not seeing follow through from that. We're seeing just maybe a little positioning ahead of today's report. Now, we're just probably going to tread water until going into that report. Maybe we'll bias to the downside because we do expect a little bit of a bearish report. The trade is expecting very small yield reductions in both corn and soybeans in this report. I don't know that that's going to happen. I think it's pretty unlikely the USDA makes changes, especially to soybean yields this early in the ball game. They may adjust corn a little bit, but it's probably a 50-50 chance at best. But we're looking at most likely a little bit of a bearish report here for corn, soybeans, and wheat. When you look at the ending stocks that we're talking about for these markets, are going to be fairly burdensome. And in the case of wheat, likely to grow because that winter wheat crop that's being harvested, yields are coming in better than expected. USDA, I don't think, has accounted for all that beneficial yields results yet. And in this report, maybe next month's report, they'll start to catch up to that, showing better yields, and that'll put more ending stocks on our bottom line.
Yeah, well, I don't know. The more I sit here and I'm doing all the shows. I'm hearing more and more talk about maybe a 1% better, yield in corn, national average or for the trend line. I have guys talking 183. Not even just hitting trend line, which was a big number anyway, but they're talking even bigger than big. Are you there?
Yeah, I'm in that camp. If you look at the yield, the trendline yield, 181, 1% increase on that is at 1.8 bushels per acre. So you're almost up to 183 just on a 1% increase. And there is crops around the country that are going to produce best they've ever had, all-time record yields. Of course, if you're in northwest Iowa, northern Iowa, southern Minnesota, parts of South Dakota, you're looking at the TV and thinking, you guys are crazy to make comments like that. But there is other states that are going to have massive crops that will probably make up for some of these deficits in these areas. So, yeah, there's a good chance, I think, that we do see probably a 1% increase. I don't think we see it today, but in subsequent reports, there's a very good chance we'll see better yields than this 181 that the USDA has forecasted.
All right, so then real quick, does that mean, if you're going to be marketing stuff, because you might have trouble with a lot of bushels, right, with your insurance, might as well just get started? What are you telling guys?
Yeah, you absolutely have to be doing something. Small rallies are probably all we're going to get. We saw, a little bit of a rally yesterday up in that 412 area for December corn, kind of a resistance point. The market pulled back from that. Yeah, you have to be doing something. Whereas, if you buy put options, if you make a bunch of cash sales, you want to re-own it with calls if you want to be bullish. But just do something. If you haven't already, it's time to get your wheels in motion and do something here. It's hard to rally the grain markets after the 4th of July. We see small rallies sometimes in August or September because of, we get a little bit drier when we're setting bean pods. But other than that, it's really hard to see and sustain any type of rallies.
All right, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more about livestock this time with Brian Hoops. We'll be right back after this. All right, welcome back. Let's remind ourselves where the jumping off point is when we talk about the livestock. What did we do yesterday? How did we close it out? How we're going to begin today. Let's go right to live cattle. August closed sharply unchanged at 182.25. And if you go out to deferreds, we did tack on a little bit all the way up to, say, even April, 47 cents better there. Closed at 188.85. All right, so that's what the live cattle curve or deferreds look like. We gained just a little bit of real estate as we go out towards that April line. Let's move on to the feeder cattle and see what they did yesterday. It was the opposite. We were up, but the fronts led the way. The backs were a little bit easier. All right, so we were up $1.80 in August. The 256.15 was the close. And as you go out the deferreds, we were still higher, but we weren't as high as we went out. So finished up way out there in January, 85 cents better there to 253.62. So we're anywhere from 85 to $1.80 higher across the feeder cattle board, and it was all in the front. Let's take a look at lean hogs. How did we do there? $2 higher in the front month August, 86.67, and then we had $1.07 tacked on in the October, 69.40 there. So you go all the way out the deferreds, small gain in Feb, 12 cents better out there to 67.85. All right, let's bring Brian back in. Brian Hoops, the president of Midwest Market Solutions. How do things look like this morning here, Brian? What do you think about the meats?
Probably just a mixed open again this morning. Cutout values starting to trend lower. The weights that came out yesterday, they're still 27 pounds heavier than a year ago level. So we still have this problem that we have more supply through the weights, and I don't know that that's going to change with corn getting cheaper. More likely, we're going to see these cattle fed out to be a little bit heavier. Feeder cattle should have pretty good support, I think, on weakness, because there will be a tendency to wanting to feed animals out. It should be good demand for those calves, I think. But we're starting to see some cracks here in the fundamentals as far as lower cutout values, softer cash trade. And so, yes, last week probably a top in both the cutouts and the cash markets. Could trend lower here for a while. But next Friday, a week from today, we have the cattle on feed report, and the numbers that I am submitting to some of the news wires looking for, placements 10% less than a year ago. And, that will be very supportive for the cattle market once again.
All right. And what's the screen shaping up like this morning? What do we look like?
We're looking just like a mixed opening. We could open 10 lower, 10 higher. Hard to give us a real direction, but the futures traded higher yesterday. I think they want to try and trade higher again into the weekend, but I guess we'll see if we can sustain that gains. That's going to be the question.
Sustain the gain. All right, that rhymes. I like it. Okay, thanks very much, Brian. Brian Hoops, Midwest Market Solutions in Springfield. Have a great weekend. You here too. Bring it back home to Music Row, and I get to say good morning to Tammy.
Good morning. Good Friday. So would you say we're kind of in purgatory?